Hi, I am Shahid, AAT certified accountant, MAAT, MAT. So today we are going to do task number 10 and it is related to inheritance tax. Um, Before starting this lecture, I request you to please subscribe this lecture. Please subscribe this channel so you can get more videos. Yeah. This channel I have started on demand of my students. So I am teaching remotely. So if you have any questions related to this task, please write in comments. I will try my best to answer. So let's start this inheritance tax. Before we start this topic, there are different rules that we have to go through. So the first thing is nil rate band. That is 325,000 pounds. So if you have any property, say 400,000 pound, and someone inherits this property, if I die today, and that 325,000 minus 400,000, so the remaining 75,000 will be taxable. So this is, you can say it's an allowance. The next one is additional resident nil rate band. That is 175,000. That is top of that one, but this will kick in only when a home is passed on death to direct descendants of the deceased. So any unused band is transferable to a spouse or civil partner. So in this case, direct descendant means children. Yeah. Then this additional is available as well. So inheritance tax rate is 40%, and if you do any lifetime transfer, it is 20%. And the next rules are taper relief. So right now there is a limit when you do a gift. So you have to live at least 7 years before it is exempt from tax. So if um, I gift it today anything and I die 3 years or less, so it means there will be no relief available. If I die 3 to 4 years, so the relief will be available 20%. And for 4 to 5 years is 40, and 5 to 6 is 60, and 6 to 7 years is 80% relief. So if I live more than 7 years, so it means that the person I have given a gift, they need to pay nothing. Exemptions. These are the rules. So small gifts up to 250 pound per transferee per tax year are exempt. So like marriage allowances, or if any, so the parents gives a gift to their son or daughter, it is exempt for, up to 5,000. So the gift from grandparent on the marriage is exempt to 2,500. One party to another, 2,005 and 100, and the other one is 1,000. And there is an allowance, annual exemption. Allowance is 3,000 pound. And the thing is, annual exemption allowance you cannot carry back, you can only carry forward. So let's start our task number 10 from assessment number 1, and then we will look task number 10 from assessment number 2. Identify whether the following statements about IHT inheritance tax true or false. Husband, wives, and civil partners are assessed independently for inheritance tax. It's true. The 250 pound small gift exemption is part transferee per tax year. Yes, it's true because we have seen the rules here. Yeah. So if you see 250 pound per transferee per tax year is a small gift. The next one is when one party in a marriage or civil partnership dies, the unused part of their nil rate band may be transferred to the surviving spouse and used against the surviving spouse lifetime transfers. No, it is false. Mr. Kyo's wife died in 2018. Her estate on death did not use any of her resident nil rate band. Mr. Q died. So before Mr. Q wife died and now Mr. Q died, the maximum amount of resident nil rate band that could be used against Mr. Q estate on death is 350. Yeah, we have seen already here. So it's 325,000. So, but here it is 350,000. So the reason is uh, because Mr. Q's wife died and her estate on death did not use any of her resident nil rate band. So if we look here now, so resident nil rate band is 175,000. So if we add 175,000 plus 175,000, so it should equal to 350,000. So this is the reason it is showing the maximum amount of resident nil rate band available is 350,000. So 175,000 plus 175,000 is equal to 350,000. It is correct. Complete the following statements that relate to inheritance tax. Uh, MSR made two lifetime transfers in 2023-24. The first one was in May 2023 for 2,500 and the second one was in September 2023 for 4,000. Mr. R had used all her annual exemption from 2022-23. So we know that annual exemption allowance is £3,000 every year, and Mr. R used all exemption in last year, so there was no uh, left to carry forward. So it means this 2,500 will be exempt, and the remaining 500 we can carry, we can use for this one. So it means 2,500 plus 500, the maximum we can use £3,000, the exemption. If you see here, this is the annual exemption, 3,000. So it means the amount of annual exemption that would be set against September 2023 is 500. Yeah. The next one is Mr. P received 7,500 from his grandfather on the occasion of his marriage. So from grandparent, if we look the rules, it's just 2,500 are exempt. So the remaining 7,500 minus 2,500 will be chargeable for the inheritance tax if the grandfather die. Yeah. So the next one is Miss T made a lifetime transfer in January 2019, which was treated as being potentially exempt transfer. Miss T died in August 2023. So if we see the taper leaf, if die someone between 4 to 5 years, so it is 40% reduction. So this is the reason it's a 40% reduction. The next one is complete the table below to show whether these gifts would be CLT, ET, or PET. So cash gifts, value £2,000. So it is an exempt transfer. Yeah, because it is less than £3,000. Next one, jewelry. Yeah, it is a potentially exempt transfer. So the reason is the person should have to live at least 7 years. Now we will go to the assessment number 2. Same task, task number 10. But it is from assessment number 2. So if we look now, we'll make it a little bigger. So identify whether the following statements about IHT are true or false. Transfer of assets between spouse or civil partners are potentially taxable. It's false. Between husband and wife, it's not taxable. A gift of £2,000 from an uncle to his niece on the occasion of her marriage would always be exempt from IHT. It's false. The next one is limited companies are not treated as chargeable person. It's false. Limited company will be treated as a chargeable person. Same like the same rules will apply. Every year, Mrs. H gives 200 pounds to each of our grandchildren. These gifts would be treated as exempt transfer. Yes, true. The reason is we have already said anything less than 250 pounds per transfer per tax year um, is exempt. So it is less than 250. IHT payable is calculated depending on the income tax rate. No, we have seen the rates here. The income tax rates are different, but the inheritance tax rates are 40% and 20% regardless of income band. The next one is a PET. A potentially exempt transfer is only chargeable to IHT if the transfer dies within 7 years. We have already looked on this rule. Where a person does not use all their annual exemption in the tax year, the unused excess can be carried forward to be used in the next year only. You cannot carry back. You cannot carry back. You can just carry forward for just 1 year. The next one is complete the table below to show whether these gifts would be a exempt transfer or PET. Gift to a national political party, it's exempt. You can give as much as donations to Rishi Sunak or to Conservative or Labour Party. It's your choice. Give to her daughter on her wedding 20,000 pounds. So we know the daughter, we can maximum um, is allowed is 5,000. But if the 20,000 has been given, yeah, it will be a pet. So the father or mother who has given this gift should have to live for 7 years. Gift of painting to a local museum, it is an exempt transfer. Yeah. So actually, these are the rules. These I have copied from your AAT assessments. So you will get these rules on your exam. So if you forget anything, you can look around. So this is the end of our lecture. If you like it, please click on the like button and subscribe and share this channel with your other friends to help them. And if you have any questions related to this task, please write in the comments box. Thank you. I will try my best to answer. Thank you.